Securities attorney Laura Anthony is a founding partner of Anthony LG, a national corporate securities and business transactions law firm. For 23 years, she has focused on her law practice with small and mid-cap private and public companies, the over-the-counter, the market, NASDAQ, New York Stock Exchange, public transactions as well, and just really anything involving business, mergers and acquisitions. And with me is Laura. Great to see you again. And it's always interesting to talk and get your expertise on this whole process. So why do companies want to go public?
So by the way, Jane, thanks for having me again. But there are a lot of reasons a company wants to go public, but the main reasons are, of course, liquidity, right? So an initial public offering is a liquidity event. Usually a company raises capital, and that money is used for growth, maybe debt reduction, but to execute on the business plan and really growth, right? The second reason, which is probably one of the very most important reasons, is continuous access to capital. After you're public, a company continues to access capital through follow-on offerings, which might be registered, or private follow-on offerings, such as a PIPE transaction, which is a private investment into a public entity. And a company really can continue to do that nonstop. And big and small public companies do that. And once a company's been public for 12 months, it can use a shelf registration statement, which allows them quick access to capital to take advantage of changing market conditions, including upticks in their price. Another reason, which is also an extremely important reason, is to attract and maintain top C-suite executives and employees. A public company usually has a stock option plan, and there's a whole other level of C-suite executives that will come into a public company because of those stock option plans and the potential for stock compensation. And all employees like to be able to participate in a stock option plan. Besides the upside, it provides loyalty, it aligns interests. They become owners with the company. Yeah. The next reason is increased valuation. Generally, a public company has a higher valuation than its private counterpart. And that's because there's an exit. There's a built-in exit. There's an investment into a private company, that investment you may have to sit for 7 years, 10 years, indefinitely waiting for that exit. When you're public, there's a built-in exit. Of course, this isn't a solid rule. There are undervalued public companies. There's also overvalued public companies. But in general, there's an uptick in valuation. There's an exit for early investors, small early investors. And I'll explain more about why big early investors or insiders are not an immediate exit. But there can be an exit for early investors. There's research coverage. Generally, a private company does not get research coverage. And with that is increased exposure to your products and services. So it can help the companies execute a business plan and grow its revenues. And finally, with all of that as a backdrop, especially for a smaller public company, there is still the potential for a much larger M&A, merger or acquisition exit. Large public companies gobble up smaller public companies all the time. So those are really the reasons to go public.
And once a company does go public, what tends to make them successful?
Execution. Execute on your business. That's number one. That's for any business, but that's number one, even if you're public. The second aspect, though, is that you don't want to be the best kept secret on Wall Street. So you really have to have effective communication to the marketplace. And you can do that in many different ways. One way, of course, is your SEC filings. It gives you an opportunity to tell your story and your management discussion and analysis. Another way is through responsible investor relations. Research coverage certainly is a great way to communicate to the markets, and media coverage, such as having your company be on a show like New to the Street. That's a great way to effectively communicate what's going on with your company to the marketplace.
Yeah. Well, thank you so much for coming and explaining all the nuances of securities law.
Thank you for having me, Jane. It's a pleasure.